What are today's three signals for KOSPI equity supply, AI sector positioning, and listed company compliance risk? It's Monday, June 15. Here's what investors are watching in Korea today.
Yeah, there is a lot to unpack today, especially with the major bottleneck we are seeing right now.
Right, exactly. Let's start with that bottleneck. The delayed dual listing guidelines. Regulators are basically taking an extra 3 months to finalize the rules on companies listing both a parent and a subsidiary.
Which is a huge deal for market flow.
Yeah, and if you are wondering how that affects your portfolio, just think of it like an air traffic control freeze for your investments. Capital isn't landing where it should.
Right, it's just stuck circling the runway.
Exactly. For instance, 180 billion won, which is roughly 129 million US dollars, just remains frozen in HD Hyundai Robotics pre-IPO commitments, all due to this exact regulatory delay.
Yeah, and the mechanics of why that capital is frozen are really fascinating because the final rules on those dual listings are still unpublished. Cable subsidiaries are basically trapped in a holding pattern.
Oh, so they literally can't move forward with their public offering.
Exactly. They can't list, so what do they do with that idle cash?
Mm.
Instead of deploying it into new productive investments, they are actively redirecting corporate capital towards stake buybacks.
Wait, really? Like who?
Well, we saw this recently with LS repurchasing subsidiary stakes. They're basically buying back their own pieces to tighten control and, buy time until regulators finally make a decision.
Okay, that makes total sense. So the supply of new equity is essentially choked off while these companies play defense. But if we pivot to where capital is actually flowing, the demand side, the picture completely
Oh,
flips.
100%. It's a totally different story.
Right. Samsung Asset Management's US AI Infrastructure Fund returned 110% in its first year.
That is just a massive number.
It is, reaching net assets of 25.5 billion won, or about 18 million US dollars. But wait, I have to ask you about this. 110% return in just 12 months.
Yeah.
Doesn't a number that hot signal a dangerous market top rather than a buying opportunity for you? It feels like we are standing way too close to the sun here.
I get that. It definitely looks overheated on the surface, but the fund's manager strongly pushes back on that idea of a bubble.
Really? How so?
Well, the core argument is structural. Korean memory chip makers fundamentally dominate the supply side of AI infrastructure. And right now, there are just no credible substitutes for their high-bandwidth memory chips.
Right. They own the market.
Exactly. Because they own that bottleneck, the underlying #KOSPI upward trajectory, led by semiconductors, is completely intact, even with the current broader equity correction we are seeing.
So they're entirely insulated.
Not entirely insulated, no, but structurally buffered. They just view this dip as a temporary financing concern phase, not the end of the AI cycle.
Okay, sure. Even if the AI cash flow is strong, though, how these companies manage their, internal housekeeping is starting to flash some warning signs.
Oh, you mean the compliance risk?
Yeah, regulators are really scrutinizing how much companies are paying to get their books checked. And the numbers show a pretty weird trend. Average listed company audit fees have fallen for 4 consecutive years.
Wow, 4 straight years.
Yeah, dropping down to an expected 246 million won, which is about 175,000 US dollars in 2026. Why are fees dropping so fast? Are companies just cutting corners on their financial transparency to save a quick buck?
That is exactly what regulators fear. In a tight economic environment, companies negotiate aggressively to slash audit hours and save money. But the Financial Supervisory Service, the FSS, is stepping in to stop the bleeding.
I imagine they aren't happy about that. What are they doing?
They just issued a really stern warning. Any unjustified audit hour cuts will trigger immediate financial statement reviews by the FSS. Plus, there is a seminar coming up on June 24th that aims to shorten the #KOSPI audit cycle to 10 years.
Oh, wow. Forcing more frequent auditor rotations to keep companies honest. So tying this all together, we've got frozen IPOs, booming AI demand, and regulators cracking down on cheap audits. What is the net supply and demand read for the market?
The 3-month dual listing guideline delay is actively constraining net #KOSPI supply, keeping 180 billion won in pre-IPO capital frozen and forcing corporate capital into stake buybacks. On the demand side, the AI fund's 110% return confirms that institutional positioning in the AI infrastructure cycle remains structurally robust despite the current equity correction. However, this dynamic is overlaid with new audit quality pressure as FSS inspection triggers threaten to significantly raise compliance costs for listed companies.
Which really makes you wonder, right? Could these looming, expensive compliance triggers force marginal #KOSPI companies to look at those massive bills and abandon public markets entirely? That's today's AI Prism, Markets Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a WANAFRA award-winning series. We'll be back tomorrow.